287%. That is not a rounding error. That is IonQ's year-over-year revenue growth for Q2 2026. $80 million in a single quarter, the fifth consecutive record print. For a company that was effectively a research lab just a few years ago, that number stops you cold. But here's the tension that makes this story worth telling. The same quarter that produced that top-line explosion also showed a net loss approaching $1.87 billion on an annualized basis, and the stock is sitting 50% below its 52-week high. So what is actually happening inside IonQ right now? Let's walk the timeline. Q1 2026. IonQ reports $64.7 million in revenue, a 755% year-over-year increase, beating the midpoint of its own guidance by 30%. EPS comes in at positive $2.07, though that was largely driven by a $1.057 billion non-cash gain on the change in fair value of warrant liabilities, not operating profit. The company also secured its first sale of a 256-qubit system that quarter, and received its first ion trap chip samples back from the fab, a meaningful manufacturing milestone. Then Q2 2026 lands on August 5th, $80.05 million in revenue, up 287% year-over-year, beating the top end of its own guidance by 15%. International revenues up, commercial revenues up, multi-product revenues up. CEO Niccolo de Masi called it the fifth consecutive quarter of record results. 5 quarters in a row. That is not noise. That is a trend. The Q2 2026 print is scored 79 out of 100 by Earnings Intelligence, labeled a decent quarter with revenue growth acceleration as the primary driver. Revenue came in at exactly $80.05 million. EPS was negative $5.08 on a GAAP basis. The company's balance sheet showed cash equivalents, and investments of $656.8 million as of June 30, 2025, with a pro forma figure of $1.6 billion as of July 9, 2025, after closing a $1 billion equity financing, described in the filings as the largest single institution equity investment in the history of the quantum industry. Adjusted EBITDA loss for Q2 was $36.5 million, and net loss was $177.5 million for the quarter. Total operating costs and expenses for Q1 2026 alone were $336.2 million, with R&D expenses surging to $125.7 million, more than triple the $39.95 million spent in Q1 2025. The company is spending aggressively, and it is not hiding that fact. So what is actually driving the revenue? The causal chain looks like this. IonQ built and deployed its IonQ Forte and IonQ Forte Enterprise systems. Its current generation hardware and customers including Amazon Web Services, AstraZeneca, and NVIDIA are actively using these systems, with IonQ claiming 20x performance results in some use cases. That hardware capability unlocked multi-product commercial contracts, international deals, and government relationships. The company then used its strengthened balance sheet to acquire capabilities it could not build fast enough organically. Lights IonQ was acquired to accelerate quantum networking. Capella Space, closed in July 2025, brings satellite infrastructure to pioneer a space-based quantum key distribution network. Oxford Ionics, a proposed $1.075 billion acquisition announced alongside the Q2 earnings, targets ion trap on a chip technology, with IonQ projecting 800 logical qubits by 2027 and 80,000 logical qubits by 2030. The acquisition of Skywater Technology adds semiconductor fabrication. Revenue acceleration followed each capacity addition. Here is where the bear case earns serious weight. The technical picture is objectively weak. IonQ's stock closed at $35.92, below both its 20-day EMA of $40.55 and its 50-day EMA of $45.77. RSI sits at 25, deeply oversold territory. The stock is down 50% from its 52-week high of $72.07. AlphaOS's technical intelligence scores IonQ at just 27 out of 100, flagging active trend breakdown and relative weakness signals, with IonQ underperforming AI infrastructure by 24.8% and the Nasdaq by 23.6% over the trailing 20 days. Fundamentally, the net loss on an annualized basis is staggering. Customer concentration is a disclosed risk. A small number of large contracts likely drive a disproportionate share of that $80 million. The filing intelligence also flagged an insider transaction from the 10Q, the sale of 16.5 million shares of common stock by an officer or director. And the M&A pipeline: Oxford Ionics, Capella, Lights, IonQ, Skywater, creates integration complexity and dilution risk simultaneously. Revenue is accelerating, but profitability remains a distant target. The signals in this film came directly from AlphaOS's earnings intelligence, filing analysis, technical intelligence, and dependency graph. The platform surfaced the 755% Q1 growth figure, the $1.057 billion warrant liability gain, the 79 100ths earnings score, the RSI of 25 and technical score of 27, the 16.5 million share insider sale from the 10Q, and the acquisition chain spanning Oxford Ionics, Capella Space, Lights IonQ, and Skywater Technology. AlphaOS cross-referenced SEC filings, earnings releases, and IR materials to build the picture you just watched. Not headlines, not summaries, primary source intelligence. IonQ does not exist in a vacuum. Its hardware runs on AWS, making Amazon a critical distribution partner and a potential competitive threat if AWS ever builds its own quantum stack. AstraZeneca represents the pharma use case, drug discovery, and molecular simulation. NVIDIA's involvement points to the intersection of quantum and classical GPU acceleration. The KISTI partnership, a memorandum of understanding with South Korea's National Supercomputing Institute, signals IonQ's international expansion strategy, with Korea specifically called out as a growth vector. The proposed acquisition of Oxford Ionics positions IonQ in the ion trap-on-a-chip manufacturing race, which matters because current ion trap systems are large and expensive to scale. Skywater Technology, as a fab partner, closes the loop on vertical integration. IonQ wants to control its own semiconductor supply chain, not depend on third-party foundries. The broader quantum computing sector is still pre-profitability for virtually every public player, and AlphaOS's industry score for computer hardware sits at just 36 out of 100, flagging a contraction cycle with neutral momentum. IonQ is the largest pure-play quantum name by market cap at approximately $13.4 billion, which makes it both the sector benchmark and the highest profile target for skepticism. 3 things to watch as this story develops. First, whether the Oxford Ionics acquisition closes on schedule and what the combined logical qubit roadmap looks like in practice. The 800 qubit by 2027 target is either a credible engineering milestone or a valuation narrative, and the next 2 quarters will start to reveal which. Second, customer concentration and contract renewal cadence. 5 consecutive record quarters, driven by a narrow set of large government and enterprise contracts, is a very different business than broad commercial adoption, and the mix of international versus domestic, government versus commercial in the next earnings print will matter enormously. Third, the technical picture and whether price stabilizes above the $32.84 support level at an RSI of 25 and a technical score of 27. The stock is pricing in significant skepticism about the gap between revenue growth and the path to profitability. The full IonQ research file, earnings intelligence, filing signals, technical analysis, and the dependency graph is live at alphaos.finance/stocks/IonQ. Research and analysis only, not investment advice.